We don't have an overweight to the technology sector right now from a tactical perspective, but more broadly, we remain optimistic about equity market returns through the rest of this year. So we do think we will see a rebound, and we actually disagree with this notion that a lot of people have that just a handful of tech stocks have driven the returns of this equity market. In fact, if you look at the equal-weighted S&P 500 index, its returns have not been that different from the market capitalization-weighted one. So this just shows us that it's been a very broad-based rally, really.
But it's interesting, if you pull those tech stocks out and look at the S&P against the MSCI Global, for example, it's a much closer pattern of trade. So they have been very important for outperformance for US investors. Given the inflow that we're seeing into Asia, emerging markets and Europe at this stage, are investors begin to pivot out of the US markets? Are North American investors moving money to Europe and Asia on a valuation argument?
So when we look at equity fund flows, it does seem that that is the case. So it seems that investors are getting very excited about China's reopening and therefore allocating a lot of money into Asia equity focused funds. And in the case of Europe, I think there was a lot of concern about a recession, and those fears have now sort of faded. Given China's reopening, low gas prices, and the sharp easing in financial conditions that we have seen, given the big rebound in equity markets, the odds of a recession in the euro area have declined substantially in our view. So it's understandable that those markets have done well, and valuations were much cheaper in those markets to begin with. So that is understandable. But if we take a step back and take a longer term view, we remain of the view in our group that our clients are better served having a strategic overweight to US assets, because the US remains very well positioned from a long-term perspective.
I got up to page 74, and buried in there was something around European banks, which is an interesting trade. And if you look across the board, it's been so uneven in the past year. I mean, Intesa Sanpaolo down 10%, one of the better banks out of Italy, right? You've had Deutsche Bank up almost 2%, Commerzbank rallying 29%, and I know UniCredit has moved very aggressively too. What do you do with such an uneven performance in the banking sector?
So we actually recommend an overweight to the banking sector as a whole, and that is really because we see a number of tailwinds for the sector going into this year. So not only higher interest rates are positive for banks for obvious reasons, but also the fact that we perhaps will not see a recession in the euro area this year is also positive in terms of we won't get a deterioration in credit quality. So valuations are also very cheap, even if you adjust for today's lower than average profitability across the banking sector. So as a result, we continue to think is an attractive sector from a more tactical perspective.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.